Alrighty, well, I think we are okay to go ahead and kick things off. So thank you everyone for joining. I do see some questions in the Q&A about some recent announcements from the Department of Education about some lawsuits. We are going to talk about that in actually our first section, so we will cover that as well as some other updates in the workshop. Before we jump in, though, I want to start with some housekeeping. As usual, this is going to be recorded. We're going to post this on YouTube, and we will provide you with the link to that in a follow-up email tomorrow. So if you miss anything, you want to go back and watch, maybe you join late, that recording will be available, and we will send the link out to you tomorrow. If you have any questions, please feel free to put those in the Q&A. I'm joined by some of our support team members who will be answering your questions during the workshop, and I will be answering some out loud once we get to the end. And last, if you need to use closed captions, I'm sending a link in the chat with instructions on how you can turn those on. It looks like my agenda is a little out of date, but we're going to kick it off with a couple of introductions. And then for our policy updates, we're going to be talking about the SAVE plan, some PSLF updates, and the on-ramp to repayment. Apologies that this slide is a little outdated. So thanks for being here. My name is Jobe. I'm a senior associate here at Savi, and I'm really excited that you're here so that I can talk to you about some important updates that are impacting borrowers, talk to you about how Savi can help you navigate what can be a confusing process, and show you how to get started with your Savi account so that you can find your best options. If you're new to Savi, the first thing that you should know about us is that you are our top priority. We like to say that we serve student loan borrowers, not student loans. So although we are here to assist with repayment and forgiveness plans and things like that, we want to make sure that we're putting you first and that these loans are not a burden on you. We've also got insider info that helps us to help you. Our team has over 2 decades of expertise, and many of us are also student loan borrowers ourselves. So we have that sort of firsthand insider info that helps us to better serve you. And finally, saving has never been easier than it is with Savi, because within your Savi account, you'll be able to see personalized repayment and forgiveness plans that are customized to your situation. And you'll also be able to enroll in those plans to lock in all available savings. Savi is your student loan benefit. And the way we work is that we partner with employers and membership organizations to offer our services. So we are not yet available to the public. We are only available through either your work, your membership with an organization, things like that. We're your exclusive student loan benefit, and we can help with any and all things student loans. So we like to say that nothing is too big or too small, and we will always do anything we can to help with your student loan concerns. Best of all, we are available for your family members. So if anyone in your family does have student loans, they are also able to access Savi. This can be children, spouses, partners. We have a loose definition of family. Anyone that you have in your family can sign up because we want to help as many people as we can. Alrighty, so jumping into those updates, kicking things off with the SAVE plan. This is the newest income-driven repayment plan that was released last year by the Department of Education. And as I mentioned, it is one of the income-driven plans that is available. So for most borrowers, this new plan is one of the most affordable ones available. It has some generous rules for how payments are calculated, and compared to the other plans, it typically offers the lowest possible payment. If you're familiar with income-driven plans, the SAVE plan did replace Repay. Repay was previously in place, but Save has now taken over. So if you were on Repay, your payment was recalculated under the new Save rules. Save is available to any borrower who has direct loans. So if you have direct loans, you can enroll in Save. If you have non-direct loans like like FFEL loans, you can consolidate those to become eligible for Save. It's important to note that Parent Plus loans do not qualify for this plan, as the rules say that Parent Plus loans must be paid on the ICR plan. And Just like with all other income driven plans, SAVE is eligible for PSLF. So if you enroll in the SAVE plan and make your monthly payments, those will count towards PSLF, just like all the other income driven repayment plans. So perhaps one of the biggest benefits, and one that we have seen a lot of interest from borrowers about, is this interest subsidy. We've heard time and time again of borrowers enrolling and making their minimum monthly payments, but their balance just keeps going up. In response to this, the Department of Education created an interest subsidy for the SAVE plan. As long as you are enrolled making your minimum monthly payment, if there is any unpaid interest for that month, the Department of Education pays the rest of it for you so that your balance does not grow. It's important to note that this does not change your interest rate. It does not affect any past interest that has already accumulated, and interest will still be accruing moving forward. But if your payment doesn't cover all the interest that accrues in that month, the Department of Education covers the rest for you. So, for example, let's say that you accrue $100 of interest every month, but your minimum payment is only $50. Typically, that remaining $50 would be added onto your balance. But now, the Department of Education covers it so that your balance will not increase any further. The SAVE plan also changed how payments were calculated, which helped to lower your monthly payment. When you enroll into an income driven repayment plan, they set aside a portion of your income to cover the cost of living. The amount they set aside is based on comparing your situation to the federal poverty level. The leftover amount is called discretionary income, and that discretionary income is what your payment is based on. The SAVE plan takes a higher percentage of the poverty level, which means you're going to have a lower discretionary income and a lower monthly payment. It can get kind of confusing to think about, so a simpler way to look at it is that no one who earns $15 an hour or less has a monthly payment on the SAVE plan. Even if you earn more than $15 an hour, you'll likely still see savings since the SAVE plan counts less of your income when calculating your payment. Alrighty, so jumping into some of those updates some of you were already asking about. I think this is perhaps the soonest an update has come out before one of these workshops. We heard about this about 30 minutes ago. So as you may know, recently a lawsuit was filed against the SAVE plan that attempted to stop some of these changes. Some pieces of it went through, some were left on hold, but as of about 30 minutes ago, all of these changes are on hold. So what exactly were the changes and what is no longer happening as of right now? Well, first, the SAVE plan was supposed to reduce payments further for undergraduate borrowers. Right now, the SAVE plan was taking a 10% of income for all borrowers, but on July 1st, it was supposed to be reduced to only 5% of your discretionary income. If you had grad loans, you would stay at 10%, and anyone who has both grad and undergrad would be between 5 and 10%. This change was implemented on July 1st. However, today's announcement does put it on hold again. In addition, another change would have given you forgiveness sooner if you had a lower loan balance. Under the current rules, you have to make payments for 20 or 25 years before you can get forgiveness under an income driven plan. Specifically for the SAVE plan, if you had a lower original balance, you could get forgiveness in as early as 10 years. Those pending lawsuits put this on hold before it was implemented, so this was not implemented just yet. As I mentioned, as of about 30 minutes ago, news did break that a federal court has ruled against this and put all of this on hold. So there's still a lot up in the air right now, and we are waiting on more answers to come out about how this is really going to impact borrowers. But as of right now, the 5% change has not taken effect, and this early forgiveness has not taken effect either. We expect there could be some things like forbearances, where borrowers who are on the SAVE plan are put into forbearance while the Department of Education figures this out. We are eagerly watching the situation and awaiting more news. We're hoping to hear from the Department of Education today or tomorrow with more news about exactly how this is going to impact you. So once we know more, we will be sure to notify you. This is again a benefit of having a Savi account is we will monitor all of these policy updates and notify you when there are changes. So we are encouraging you to make sure you've got access to that account. Sign up for Savi if you are new. That way we can send you all of our correspondence about these policy updates because this is a rapidly evolving situation. New information is coming out every day. Sometimes it changes hour to hour. So that is why we recommend getting that Savi account is we're going to keep up with all of this for you, notify you once the changes are made that impact you so that you can stay in the know and make whatever decision is best for you. In the meantime, while this save sort of changes are happening, we want to remind you that income-driven repayment plans are available to everyone, and there are other income-driven plans that could potentially provide you with a lower monthly payment. So even though these save changes are sort of in flux, you could still likely get a low payment by enrolling in a different income-driven repayment plan. And you can see what your payment is under all of those in your Savvy account as well. Alrighty, next up are some updates to the PSLF program. So if any of you are already enrolled in PSLF or know anything about it, you may know that it was previously managed by a servicer called Mohila. Previously, Mohila was the only servicer who managed PSLF. So for anyone who enrolled, they were transferred from their servicer over to Mohila. Right now, though, the Department of Education is moving this program over to studentaid.gov. This will make the program available across all loan servicers so that you no longer have to transfer to Mohila in order to enroll. In order to do this, there is a processing pause on applications. That pause began on May 1st and is expected to continue through at least the end of this month. So, what this means is that from May 1st through the end of this month, applications can be submitted, but they will not be processed. They are going to take them, hold on to them, and start processing them once the program is moved over. This is allowing them to move everything over, get all of these new systems set up so that they are ready to go once the program is launched on studentaid.gov. I know a couple of borrowers have had some questions about this. So if you have already been enrolled in PSLF, you are not able to see your progress in your Mohila accounts anymore. Do not panic though. Your progress is still there. You are not losing out on anything. They're simply moving all that information over from Mohila to Student Aid. Once the transition is complete, all of that information will again be available on studentaid.gov. So if you have been already enrolled in PSLF, you'll be able to continue your progress, pick up where you left off. That information is just moving from one system to another. So what should you do during this time? You can continue to apply for PSLF just like normal. They're holding on to those applications. They're going to process them soon. So you can apply just like you usually would, and they will process it later. This does mean that it may take a little longer than usual to receive your results, but that is all okay. You can create your ECFs in your Savvy account like usual too. And the great thing about this is that we can actually help provide you with some application statuses. Uh, because they're not processing forms, the Department of Education is also not sending out any updates, meaning that they aren't sending out confirmations that it was received, anything like that. Submitting your forms through your Savvy account, we can confirm that it was successfully submitted, provide you with those updates so that you know you got those forms in and that they are in the pile waiting to be processed. Keep in mind that payment counts aren't being updated during the pause either, but payments are still due. Even if you're pursuing PSLF, you should keep making your monthly payments to earn progress. Once the pause ends and they start processing applications again, you will see those updates to your payment counts. In the event that you are almost to the finish line and you make your 120th payment during this pause, You'll be refunded for any excess payments over that 120 once they resume processing. Alrighty. And another update for you is the on ramp to repayment. So, if you've attended any of our workshops last year, we talked a lot about this on ramp to repayment and how it's essentially a safety net for borrowers. We haven't talked about it much recently, but it is coming to an end. So, we want to kind of provide a recap of it and what you should know about and how it will impact you. So, from when payments resumed last year in October through September 30th of this year, the on ramp to repayment was in effect and acted as a sort of safety net in case you were unable to make your payment. So during this time, if you had a late payment, a missed payment, or only made a partial payment, you would not be reported delinquent and you would not fall into default during this period. This helped borrowers transition successfully back into repayment after more than 3 years of that payment pause. Although you won't be penalized for missing a payment, it's important to note that interest is still accruing during this time, and those payments are still due. If you are able to make your payment, we highly recommend that you do so, especially if you're pursuing PSLF. Because the payments are still due, if you miss a payment for that month, you're still going to be responsible for it later. If you don't make it, though, you won't be penalized at least. But keep in mind that not making a payment is not going to help you earn progress towards PSLF or IDR forgiveness. So basically, to sum it up, make your payments because they are due, and that's what's most beneficial for you. But if something happens and you're unable to make your payment for a month, there won't be any penalties for that. So, because the on ramp to repayment is coming to an end, though, it's important that you are on track and in the best situation for making your student loan payments after September 30th. Because after that date, if you do miss a payment, there could be penalties. The moment you miss a payment, you become delinquent on your loans. And if you are delinquent for an extended amount of time, you could even default on your loans, which could adversely impact your credit history, make you ineligible for programs like PSLF or income driven plans. It really can just lead to a lot of headaches. So it's very nice, or excuse me, very good and beneficial to start thinking about this now and make sure that you're in the best position possible when this on ramp ends. We encourage you to check your payment amount and make sure that it's affordable before September 30th. We recommend enrolling in income driven repayment plans to lower that payment and get it more affordable. Because it's based directly on your income and your family size, it's typically much more affordable than payments offered on the standard plan. And many people have experienced, changes in their family or income recently. So there's a good chance that your payment may be lower if it's been a while since you checked. You can see what your repayment options are in your Savi account. We will show you, all the different repayment plans available, what your payment is under each one, so that you can compare all options and enroll in whichever one is best for you. Keep in mind, income-driven repayment applications take around 4 weeks to process. So we encourage you to apply with enough time to get those processed, start budgeting for that new payment, so that when September 30th rolls around, you are good to go. Alrighty. Before we open it up for some Q&A, let's go through a couple of frequently asked questions and how you can get started with your Savvy accounts. So one of the most common questions we receive is, how can I get my loan forgiven? There are two main programs that can provide you with loan forgiveness. These are public service loan forgiveness or income-driven repayment forgiveness. For PSLF, this program forgives your remaining loan balance after you have worked in public service and made payments on your loans for 10 years. There are some more specific requirements you need to meet of being a full-time employee, having direct loans, and paying on an income-driven plan. But once you have met those requirements and paid for 10 years, the entire remaining balance is completely forgiven, including interest. I remember seeing a question about this at the beginning of the workshop, and I want to clarify that today's announcement about the Save Plan lawsuits does not impact public service loan forgiveness. Those lawsuits are only about the new updates to the Save Plan. PSLF is a separate program. There are currently, no lawsuits that have put this on hold. So PSLF is still available. If you're pursuing that program, everything is good, on track, and there are no impacts to this program. For income-driven forgiveness, this program forgives your remaining loan balance after you have made payments for the required amount of time. And you can see the lawsuits actually do impact this one a little bit because my slide is a little out of date. Um, the proposed changes under SAVE would let you qualify for forgiveness after 10 years of payments, but the lawsuits put those on hold. So as of right now, for income-driven forgiveness, you enroll, make your payments on an income-driven plan for 20 or 25 years, and then the remaining loan balance is forgiven for that program as well. So those income-driven plans are great because they lower your payment to make it more affordable for right now, but then they can provide you with some long-term savings by forgiving the loan balance after the 20 to 25 years of payments. Next question, what do I do if my payment is too high? This is a great reason to use Savvy, and one of the reasons we started is because we want to help borrowers explore their options. If your payment is too high, you can use Savvy's website with our personalized repayment estimator. We're going to compare all options available for you and lay it out so that you can see exactly what's available. You can see each repayment plan you qualify for, as well as what your monthly payment would be under each plan. Typically, as I've mentioned a couple times, enrolling in an income driven plan is going to provide you with the most affordable payment, since these are usually lower than the standard plan. It also helps you earn progress towards forgiveness, like PSLF or IDR forgiveness, so kind of a double bonus. In order to see what you qualify for, just enter your general info in your Savvy application. The results page will show you what's available so that you can pick a plan and easily get enrolled. So, how can I apply for these programs through Savvy? Once you've entered your general information, the results page will show you what options are available. You can see exactly what your monthly payment would be, your total payment, forgiveness timeline, and forgiveness amounts. You can compare all options, and then depending on what you're enrolling in, when you continue, the Savvy application will generate the necessary applications for you. So if you're switching your repayment plan, we'll actually create the income driven application for you. If you're enrolling in PSLF, we'll help create those forms and get them signed by your employers so that you can enroll in PSLF. And can Savvy help me with my loans? The answer is yes, 100% yes. We want to help anyone and everyone we can, and we are here to help to make this process easier for you. So you'll be able to see your personalized options within your Savvy account. But if you need help from someone and you want to talk to one of our support team members to kind of just discuss your options, get a little bit more guidance, you can reach out and get personalized one on one help with your situation. This is a benefit of our essential or pro plans, which are our premium plans. It's absolutely free to see what's available, and there's no cost to signing up for Savvy. Our essential and our pro plans are premium plans that unlock more features like this one on one support. With these essential and pro plans, we are able to resolve things like loan servicer issues, answer any student loan questions you have, and help get you on track for forgiveness. It's really nice to have that peace of mind of just talking about your options with someone, seeing what's available, making sure you're on the right track. We want to do everything we can to help. And as I've said, no concern is too big or too small. So if you have experienced any issues with your loan servicer, maybe you have a complicated situation and you're looking for some more help, uh, feel free to take advantage of our Essential or our Pro memberships. Reach out to our support team, and we are more than happy to help. Alrighty. So to go through a couple of next steps on how you can get started with your Savvy account, and then we will open it up for questions. We want to make sure everyone has access to their accounts. If you are new to Savvy and have not signed up yet, you can scan this QR code to get started. We have unique sign up pages for each of the organizations we work with. So you'll scan that QR code and search for either your employer or membership organization who referred you to Savvy. It will then be redirected to their unique sign up page. And I will also put that link in the chat for all of you. If you are a returning user, you can scan the QR code on the right to sign back into your account. Also, if you did opt in while you were registering and you're a new user, we can actually create an account for you. And if you opted in, we will send you instructions on how to activate that account after the session. So when you're using Savvy, it's three simple steps to get on track. On step one, you'll enter all of your information in the application so that we can run the numbers in the background. On step two, we will lay it out for you and show you exactly what options are available. You'll pick your plan and proceed to step three, where we will be able to submit those applications and lock in those savings for you. I have mentioned these plans, but I want to talk a little bit more about the different membership levels Savvy offers. Remember, it's absolutely free to create your account, and there's no cost to seeing what's available. With our free do it yourself plan, you'll see what's available, and we will provide you with instructions on how to submit the applications and enroll. If you are looking to unlock some more features and get some more help with your situation, you can enroll in the Essential or the Pro plans. The Essential plan unlocks great features like letting us submit the applications to enroll you in your plan. We monitor everything moving forward to keep you on track for forgiveness. And best of all, this gives you access to that personalized support from our student loan experts. If you're looking for an even higher level of service, we offer our Pro plan. This includes all essential features, plus a more hands on sort of concierge level of support. You'll get a personalized onboarding session, dedicated phone support so that you can talk to us anytime you need, and a comprehensive student loan review. These are premium plans, but the good news is that many organizations offer discounts on these. So that's why it is important to sign up with the unique link from your organization, and you can check how much these plans are for you in your Savvy account. Typically, our most popular plan, this Essential plan, is one that a lot of people are interested in, and it typically is no more than $70. Plus, as I mentioned, many employers and organizations offer discounts on that plan. Last thing I'll say about these is that these are also yearly plans. They are not monthly, and we do have that money back guarantee. So we encourage you to see what options are available, check out repayment and forgiveness plans for you, and if you would like to unlock more features, consider enrolling in one of these plans to make the most of your Savvy account. If you have any questions, we are always here to help. You can click the contact support button from any page of our website to access resources. We have our Help Center, which includes articles on common student loan topics, frequently asked questions, and even videos that show you how to use our website. If you are an Essential or a Pro member, you'll be able to reach out to our support team to get that one on one help with your situation. We've got a lot of different ways you can contact us. You can email us. We have a new live chat feature. And again, those Pro members have that dedicated phone support to book calls with us. So, a lot of different ways to reach out. And we really encourage you to do so if you need help with your situation. Alrighty. So, as we are wrapping up again, next steps, if I can impart any sort of last recommendations, be sure you have access to your Savvy account so that you have access to all of these resources after the workshop. Again, this is really important right now because, as you've seen, there have been some recent updates to the Save plan, and we are expecting even more announcements to come out soon. With access to your Savvy account, this will ensure you stay in the loop and we can reach you with all of those important student loan updates. If you're looking to make the most of Savvy, enroll in Essential or Pro to unlock more great features, and be sure to complete your applications to see what options are available for you. So that's everything we've got for you today. We can now open it up for some questions. So let's take a look at the Q&A and see what some are that we can get answered out loud. If I'm on the Save plan already, should I still sign up for Savvy? Great question. So we recommend you can sign up for Savvy no matter where you're at in this process. As I mentioned, this helps ensure that you have access to our resources and announcements moving forward. But also, it's possible that maybe your situation has changed or there's a better plan out there for you. This goes for all the income driven plans and forgiveness programs. Even if you've already started this process on your own, we can just double check everything, make sure it all looks good, and then we'll be able to help you moving forward to keep you on track and ensure that you're always getting the best outcome. All of my loans were approved for PSLF. What should I do? So, if you have been accepted into the PSLF program, you will just need to continue making your payments until you reach 120. You'll need to turn in something called an employment certification form once per year to get credit for more payments and get closer to the finish line. Savi can help you with getting on track, enrolling, and submitting those forms once per year. If in this situation, if you mean that you've already been approved for PSLF, congratulations. And all you need to do now is wait for that forgiveness to come through. Someone says, I did an IDR because I think I had to, but I want to do PSLF. Did I mess anything up? Not at all. So, income driven repayment plans and PSLF are separate programs. And actually, you have to be on an income driven plan in order to enroll in PSLF. So, without even knowing it, you already took one of the necessary steps to getting on track for PSLF forgiveness. We can help you. We can make sure that you're on the best repayment plan. There's not a lower option available, and then we can help you take any other necessary steps to getting enrolled in PSLF. Is it possible to pay for my loans through my paycheck as a pre-tax benefit? Um, I'm not familiar with any programs like that. Sometimes employers will do offer a benefit where they will maybe make a contribution to your student loan payments. Um, the only sort of tax benefits I am aware of is at the end of each year, you do receive a tax document for the amount of interest that you paid on your student loans, and that typically is reflected and gives you a small break in your tax return each year. Will Savi help track my PSLF payments? It would be handy to look and see where I'm at. Yes, so we can help get an estimate of how many payments that you've already made and how much further you have to go to get PSLF. Once you enroll, we will help track everything moving forward so that you can see your progress, know you're staying on track, and know how long you have until you receive that forgiveness. What if my Savvy application shows that my repayment options are more than what I currently pay? Uh, do I have to enroll? Am I required to? Great question. So, most people are able to find ways to lower their payment, but every now and then, it is possible that you're already getting the lowest possible option. If that is the case, we can take a look and see what repayment plan you're on. If you're already on an income-driven plan, you'll be good to go and you can stay on that plan. If you are on a non-income driven plan, like say the standard plan or an extended plan, every now and then those do offer lower payments than income driven plans, but it's important to note that those do not qualify for forgiveness. So, under those plans, you may have a lower monthly payment, but you will be paying off the loan instead of pursuing forgiveness. That's why it's helpful to look at the total payment and total savings to see if, even though your payment may go up short term, it could provide some more long-term savings. This is again what Savvy can do. We can help weigh all those options so you can compare, see if your current plan will provide more savings or if switching will. Everyone's situation is different. There is no one size fits all when it comes to student loans, but that's what Savvy is here to do, is adapt and show you your unique options. What happens if I don't turn in the forms each year? Great question. So for PSLF, your employment is only updated and you only get credit for more payments by turning in new forms. So let's say you turn in a form today. You're going to get credit for everything you've done up to today. Even if you keep working, the only way you'll get credit for more is by turning in the new form. We recommend doing it once every 12 months because it lets you get credit for another year of payments and ensure that they're all being counted towards forgiveness. Technically, you can wait until the end and submit the form just one time, but it's more likely that you could get off track for forgiveness without realizing it. You're not required to turn in the form once per year, so if you don't do it, you're not going to be penalized. You won't be removed from PSLF. We have just found that that tends to be the sweet spot and make things easier so that you can ensure you're getting credit for all your payments and stay on track for forgiveness. In the Savvy site, do we need to resync our accounts after the transfer? So if you have transferred loan servicers, then yes, you would want to update that account and resync with your new servicer so that we can continue to monitor your current loan situation. We are still waiting on some more info to come out about what the specific PSLF part will look like with student aid. So once we have more idea about how that works and if syncing will be required for that, we'll be sure to let you know. Repayment is typically paused while attending school. Does this pause also apply to Parent Plus loans? Yes. So if you take out a Parent Plus loan for your student and that your child is in school, typically the Parent Plus loan is paused for the entire time they are in school. So let's say they are in their first year of school, you take a loan out now, it will be paused until they graduate or leave school. Any advice on how to communicate with Mohila? I'm getting conflicting information and I can't seem to get through after being moved to their new platform. So, unfortunately, things like this do pop up where borrowers experience servicers with their issue. And this is one of the reasons that Savvy started, is because servicers will tell you one thing and then tell you completely different information the next time you talk to them. And it can be difficult to reach them and get through to get help. This is why Savvy is here, is because we can help take a look at your situation, try and see, what's going on and resolve that, and work with you to help you get in contact with those servicer and resolve those issues. So if you do have questions, I'd recommend talking to our support team. They're really knowledgeable about all things student loans. They've got really fast response times, and in many cases, we're going to get back to you much faster than your loan servicer will, and help you to navigate this process with them and find out, whatever you need from them. If I am in default, will I have bad credit on September 30th? So if you are in default right now, they are, I believe, not reporting those defaults to the credit agencies, but they will start reporting that again after the on-ramp to repayment. If you're in default, the good news is that there is relief available that could help you get into good standing. There's a program called Fresh Start, which brings you out of default and puts you into good standing again so that you're no longer being reported as in default. You have access to programs like income-driven repayment plans. It's a really great way to quickly get back into good standing. You can enroll on Fresh Start just by calling your collections agency and asking them to enroll. They will enroll you into it, bring you out of default within a few weeks so that you are in the best position for that September 30th date. What is the cost of the Pro plan? Typically, that is no more than $200 a year. And again, some organizations do offer discounts on that plan. Is there a fee to upload my information to Savi? There is not. It is 100% free, no cost to completing our application. So you can add your information and see what options are available for you absolutely free. Will the payments I make now count for PSLF even if my form has not been completed? Yes. So as long as you're working in public service, making your payments right now, that's okay. The forms are retroactive, so they will give you credit for the payments made after that. Even if you haven't turned in a form yet, you can turn one in, get credit for the payments that you've already made. Once I call and enroll in Fresh Start, would Savvy be able to help me get the best repayment option? Yes. So once you do Fresh Start, it will put you back into good standing. That makes you eligible for income-driven repayment plans again. Savvy will then be able to check out your options and see which of the plans is going to give you the most affordable payments. I have my student loan payment set up with Mohila to be automatically made, but no payment was taken out this month. Do you know why? So as of right now, Mohila is actually going through some system updates. They are moving to a new, more secure system. You may notice recently that their website has changed from, I believe it was mohila.com to now it's mohila.studentaid. So as they are going through these transitions, some borrowers are having their payments put into a forbearance. This is a temporary pause on your payment, typically for about a month, while they move your account over and update it. This way, you do not have to make a payment while they're making those changes. So likely, if I had to guess, you are just being transitioned to the new system. You didn't have to make a payment this month, and it will resume once your transition is complete. At that point, you can log back into your new account. They should send you instructions on how to do it. And I would recommend double checking your auto pay. We have heard from a couple of people who, after the transition, they were not put back into auto pay. So it's worth double checking just to make sure that you don't miss a payment without realizing. I see a few people say that my Savi account isn't showing PSLF. So let me go back a couple of slides. I want to show you how you can sort of interpret those results. Um, so here on the results page, you'll see all of your different options. And some of them will say this and say that it's a forgiveness eligible plan. Keep in mind that for PSLF, you are required to pay on an income-driven repayment plan. So typically, what we're going to show you is sort of bundling the options of enrolling in an income-driven repayment plan and pursuing PSLF. I don't have a screenshot of this in more detail, but if you click Show Plan Details, it will break it down for you and it will tell you what this forgiveness program is. So in this specific screenshot, it would say something like enrolling in SAVE and pursuing PSLF, receiving PSLF forgiveness in 9 years, 6 months. So you can check there to see if that is an option for you and if you're pursuing PSLF that way. And if you do this sort of bundle of options, will help you do the income-driven application and the PSLF. Again, if you have any questions about any of that, I know I kind of am going through this quickly, but if you need help understanding your options, you can always reach out to our support team. We are able to take a look at your account, see those options, and discuss them with you so that you know exactly what you're enrolling in and what steps are needed to get on track for forgiveness. Mohila has placed my account in an administrative forbearance while they review SAVE. So nothing to worry about there. They've been putting people in forbearance while they were changing people's payments to 5%. I now suspect they're going to put people back into forbearances because of the lawsuit announcements today. If you see a forbearance on your account, don't panic. It just means your payments are temporarily paused while your servicer is sorting everything out. Once they do get it sorted out, they'll be brought out of forbearance, your payments will resume, and they will notify you before your payments are due again. I came in late. Will we get this recording? Yes, we recorded this session. We will be posting it on our YouTube channel, and you will get the link to that tomorrow in a follow-up email. How can I reach the support team? The best way to do that is to click the contact support button to reach us. You can click contact support from any page of our website. And then if you are an essential or a pro member, you'll be able to reach out to us. We've got email where you can send us a message via email. You can use our live chat feature to chat with us during the day. Or if you're a pro member, you can actually book a call with us. So a lot of different ways to reach us, and you can do all of this by clicking contact support. Do administrative forbearances count for PSLF? Yes, they do. Those are really the only time where payments are paused that can count, with the COVID payment pause as well. So the COVID payment pause was a forbearance, and that will count. And then any administrative forbearances will count too, since that's time where your servicer is making updates to your accounts. Other times where payments are paused, though, like an in-school deferment, other types of forbearances that were not COVID or administrative, those will not count, and you do need to be making payments to earn progress. Does the Pro plan provide one-on-one support via phone? Yes. As a Pro member, you will have dedicated phone support where you can actually book a call through your Savvy account with one of our support team members, and then they will be able to answer any questions that you have. So you can book those calls anytime you'd like, anytime you need, and we will be able to assist you with any concerns that you have. Savi says my public school employment is eligible, but the PSLF help tool says that it's not. Do you know why? So again, another reason why Savvy started is while they do have the best of interests, every now and then the student aid website or servicers can provide you with inaccurate information. Um, if you are a public school teacher, uh, in 99.99% of cases, public schools are eligible employers. So even if the student aid tool says that you are not eligible for PSLF, it's definitely worth checking again with Savvy because we sometimes can take a closer look, be more accurate, and with the support team, you actually have a real person you can chat with to take a look at your situation and determine that. I will say if you are working at a public school and you're working more than 30 hours a week, I do not see any instance where that employment would not qualify for PSLF. But if you do have more questions about that, feel free to talk to our support team, and we are happy to kind of sort it out and figure out why that discrepancy is there. If I'm on an IDR plan, but the amount to pay is zero, does that count towards PSLF? It does. Months with a $0 payment do count towards forgiveness. So, so technically, you're not making payments that during that time, but you are considered as still in repayment. Time with a $0 payment is treated differently on the back end than, say, a forbearance. So while a forbearance may not count, a $0 payment on an IDR does. I also see that someone has a question about how interest accrues in deferment versus forbearance. Um, so how interest accrues, it depends on what type of loan you have. If you have a subsidized loan, typically it does not accrue interest during times of a deferment or forbearance. If you have an unsubsidized loan, it usually is always accruing interest. So take a look at your loan type, see what type you have. If you have subsidized loans, those should not accrue interest during pauses. If you have unsubsidized, they are always accruing interest. The kind of one exception to that is the COVID payment paused, where everyone's interest was paused no matter what type of loans you had. How can I access the contact button? It's available from any page of the Savvy website. It's typically in the lower left corner. You can click this and it will pop up with these resources. Anyone can access our help center, and Essential or Pro members can reach out to our support team for one-on-one assistance. What website do we go out to find out our loan interest rate and principal if we're in default? So the studentaid.gov website can show you who your current loan servicer is or your collections agency if you don't know who they are. I will type that in the chat as well, but it's studentaid.gov. You can sign into your account there. They will tell you who currently holds your loans and how to get in contact with them. Does interest accrue on the save plan? Yes, interest is technically accruing. However, if your monthly payment does not cover all the interest that accrues, The Department of Education covers the rest for you. Alrighty, I'm looking through trying to find some more last minute questions. I know there are some more questions we didn't get to. There's still about over 30 in the Q&A that are open. We've got just about 1 minute left. So I don't think we're going to be able to get to every question today. If you have a question I was not able to get to, I sincerely apologize, and I would really encourage you to make sure you have access to your Savi account. Start working through that application. There's a very good chance you might find the answer just by entering your info. If you do still have a question, please do not hesitate to reach out to our support team, and we are going to be more than happy to help. Some of them are on answering your questions today, so you may see some familiar names when you reach out. And they, as I mentioned, they're so knowledgeable, they're so helpful with all things student loans, and I know you will be in great hands. So as we wrap up, I just want to say thank you again for attending this workshop. We do host these sort of policy updates at least once a month, usually more. So be sure to stay up to date with Savi by registering for your account so that you have access and can receive all of our updates. Check to see what options are available for you. And if there's anything we can do to help, please do not hesitate to reach out. Thank you again for attending. Be sure to look out for that follow-up email tomorrow, which will include the recording link as well as some other info to help you get started. Thanks again, and I hope you all have a great afternoon.